Good morning, Trade Pros. Sound check 1, 2. I hope you guys are having a great day. 1 second. Someone yesterday said, "What happened to sound checks, man?" And guess what? I'm starting there today. Let me just make sure it is working. Yeah, audio's hitting, video's good. All right, well, welcome to our morning market update. It is George Papasov. I am the CEO and founder of Trade Pro Academy, and today we're going to talk about a few things, including non-farm payrolls. We're going to talk about Donald Trump and his latest action, not political related, no politics on this channel, and all market-based. And then we're going to talk about our options levels for the day. I'll give you the story for the U.S., the story for the overnight movement, and how that shapes up to be our trading plan for today. Yesterday worked out really well, both in the room and kind of the trading plan that we had painted for the daily session. Everything came together. Today, we're trying to do the same. Futures are slightly up across the board today. In Europe, markets are green, with stocks 600 leading the way up 0.4%. Dollar index is up 0.2 as well. All right, oil is up, gold is slightly down, and Bitcoin and Ethereum are down as well, about 0.5 percentage point. Not really too dramatic. So the big thing on today's calendar that happened pre-market at 8:30 in the morning was the all-important non-farm payrolls report. The first thing you got to know is this kind of didn't have much impact directly for the Fed, because for January, the odds of a rate cut in this month are next to zero. So it's not going to happen. All right. But the number is still important because the jobs market is a key focal point for the economy. It's a key focal point for growth. It's a key focal point for portfolio managers and just everyone on the street. For day traders, the only thing that creates is volatility for us. So at 8:30, non-farm payrolls came out, and it came out as follows. The expectation was 60,000 jobs being added, and it came out for December at 50,000 jobs added. So it missed by 10,000 jobs. All right, the prior was 56, and that prior number was actually revised higher to 64,000. So that's actually kind of positive for the jobs market. But it's a miss. It's a headline miss, and it's not fantastic. But if you dig deeper into the data, there is some positive notes in that report. All right, the participation rate went from 62.6 to 62.4. There's less people participating in the job market. All right, non-farm payrolls on the manufacturing front was minus 8,000. So there's an 8,000 job lost versus minus 5,000 expected in manufacturing. Not good, because manufacturing is a focal point for the current presidential administration. All right, and average hourly earnings went up to 3.8% annualized versus 3.6%, so it ticked up. So basically, less jobs added, they tend to pay more, but less people are participating in the job market overall is the outlook. Again, it didn't really impact the Fed, the market odds of a rate cut, but it's okay because Donald Trump launched his own QE program to bypass Powell. We'll talk about that in a second. What else is coming up on the calendar? 10 a.m. we got University of Michigan sentiment for January. It's very important because it's a preliminary number, and the first release we get, usually preliminary, then the number, then the revised one, and then just more and more iterations. But it's very fresh data. This is a data report for January in January. That's at the top of the hour at 10 a.m. Also today, and probably the big thing, the big unexpected tape bomb. It's unscheduled, so we don't know when it's going to be or if it's going to be at all. But if it happens, it's a really big event that's going to start to really push markets all over the place, and you'll get a sudden burst of volatility, is the tariff decision by the Supreme Court. It could rule today on Trump's Liberation Day tariff that was launched. In the markets, in the betting markets and poly market odds, 24 to 25% chance that the Supreme Court approves it as constitutional or as legal, and that they rule in Trump's favor. All right, and that's down from 48% in November. So these are just the market odds. Again, remember, none of this means anything. The official announcement or the official decision may not come today, or it may come today. They're meeting for comments, and if you do hear something, it's going to be a tape bomb. It'll be very sudden. You will know what's causing it because the price will start fluctuating and moving with severe madness and volatility. And you just know, have that in the back of your mind, that this is what could potentially happen today. And if it does happen, it's hard to know what impact it'll have in the market other than severe volatility. All right, so that's kind of what we're looking for. Donald Trump is directing the purchase of $200 billion in mortgage bonds to drive down the spread and interest rates overall to the consumer. All right, Fannie and Freddie may say they have the cash to execute that quickly and to put that into the market to drive rates down. And the goal here is to make home ownership more affordable. It's a one-off at the moment. There aren't many details of this is a initial purchase of $200 billion and then a small amount monthly or what's going to happen. It's definitely not going to be $200 billion a month. That's a lot of money, but look to that for a little more details. It's designed to stimulate and promote the economy. So we're watching to see where we're at here. Okay. In Venezuela, we have some developments. Again, remember, no politics on this channel. So this is all market driven. Donald Trump did say at least $100 billion will be invested in big oil. And he is meeting with the energy executives of the big U.S. companies today. So I would be shocked not to hear more updates on this throughout the session. Keep that in mind. It's going to affect the energy complex. 1 second. It's going to certainly affect the energy complex this morning. All right. Marathon Petroleum is a name that's floating around there that has interest in Venezuelan oil and planning to submit a bid for redevelopment of the entire infrastructure in Venezuela. And this is a sticky note where it gets political. I'm not commenting on it, but the U.S. is ending the discount on Venezuelan oil for China. Remember, China has a lot of assets and investments in Venezuela themselves, and they're knocking Russia out of the market completely. So the reason I mentioned this is there could be some kind of response from whether it be, tariffs from China or some kind of other response in the coming days. Keep that in mind because that response may impact the market. Okay, let's turn around and build a trading plan. Let's talk about the call walls for today. Let's talk about the story that the U.S. market told us yesterday, the overnight story, and the trading plan, and let's leave it off there. So let me spin around, do a little spinaroo, see who's in the room. Red candles, good morning. William, good morning to you as well. A little light on the comments today. I'm not heartbroken. Slightly hurt, maybe. Just kidding. All right, let's talk about the story first and foremost. Actually, let's talk about the options levels. So I've extracted SPX open interest levels for the options market, and I've basis adjusted them for the futures spread of about 42.75 points. And the biggest one that's kind of coming into this area is 69.93. But I think from 6,900 all the way to 7,000, you got a lot of gamma adjustment by dealers. And I think if we could push north of 7,000, we get the self-fulfilling prophecy of dealers having to continuously to buy to gamma hedge, which creates more upside, which creates more gamma hedging. We could get that loop happening, but it would have to press above 7,000 for that to really start to kick into effect. All right. This story is this. Let me move my notes because I have my notes. I've written stuff down. I like to do it before the fact. All right. So yesterday we opened at 69.54. First of all, before we get into the story of it, just notice where we're coming from because it's key. Big drop here going into yesterday's open. So the day before yesterday was a big bearish drive extension day. And then yesterday was a little bit more scuffled. We'll talk about it. So here we are. This is yesterday's day. We opened at 69.54 right here, which is really near the overnight lows. Overnight lows are down here. All right. And wait, my bad. The overnight lows are here. And, we started bearish for the day. We said 69.64. This big yellow box here is going to be our flip zone. Below it, we stay short. Above it, we get long. We had two short trades. One here, a really nice one for the day. And then the second one occurred up into this level, the retest. So we had two great short trades in the room. The room did spectacular yesterday. And it's all because we didn't turn into buyers because we had a flip zone. We had our level below which it doesn't make sense to buy, and the level above which, if exceeded, it would turn us on to the idea of getting long. And a lot of the guys had short trades all day, even in the afternoon in our community. All right. We saw bearish order flow yesterday and strong imbalances. And that kind of confirmed the trading plan for yesterday. We got and stayed short all day long. All right, but we got a price consolidation. We didn't get one of those runaway trades where you short it, you take your initial, you take it, another one 20 points lower, another one 50 points lower. One of those runaway trailing days that is so juicy. That didn't happen, but there was a lot of initial position being locked, and there's nothing wrong with it, right? If when your initial targets hit, you get out and you get paid. That's the trade. That's the part you can control. What the market gives you, you can't control, nor should you try to control it. All right, but most trading within the day here was done within a 10 to 15 point range, and the middle of the open range was the support. And not surprisingly, our flip zone was the resistance. So we were pinned in there and we're trading and cycling through. All right, we closed at 69.61 quarter, pretty much in the middle of the range that held for the day. And we traded 1.3 million mini contracts. It's not a lot. It's not a small amount. It's usually closer to 2. But volumes are still building up for the year. We haven't had a volume day that exceeded 2 million contracts yet because it's January 9th. We're just getting started here. There's a lot of unknowns as well. So the story for the overnight is pretty simple. The overnight low formed that 69.54 quarter. The reason you want to know that is because that's kind of the middle of the opening range. So having the overnight low be there starts to look like acceptance of price. Price was comfortable, was being accepted at this level. And, you know, we were kind of at a balanced area. And it's good. It starts to paint the narrative for what's building up to be a bullish day today. All right. Overnight high at 69.76 3/4 was below the 69.77 3/4 prior day high right here. This is where we're opening, or not opening, but this is where we were before non-farm payrolls. And in fact, one thing you want to mark on your chart today is the pre-NFP level. It's going to be very, very, very relevant. And if we end up having a consolidation day, I would not be shocked that we just dance around it, and that ends up the middle range of the day. So that level is, I believe, what is it? 74 3/4. Mark that on your chart. Throw down pre-NFP. That's what this big ugly line is for, because now you know the deal. And these pre-event numbers are more are stronger to watch and follow than what actually happened after the report, because it's an anchor in time before we had this volatility. So jobs report came out weaker. We already talked about that. Pushed stocks up a little bit higher, not because the economy sucks and the job market is falling apart, but it went higher because it kind of supports the Federal Reserve to cut rates and give the market lower lending costs, and that is exciting. That's where we're at there. We rallied directly into our S&P 500 options wall at 69.93. See this? We rally up into it, and then we failed the first time. Where did we go back to, ladies and gentlemen, on the retest? The pre-NFP level. If you didn't have it there, you wouldn't have known that's significant. And then it rallies up through it, and we're kind of starting to get a little more volatile leading into the open, but not full volatility yet. So, yeah, green otter, there's that, right? We can't get mortgages without good jobs. Though, maybe that should have been the headline. You're right. Oh, man. I might change it. I'll give you credit if I do change it. That actually is low-key the best headline right there. It's true. It's honestly true. And the reason that there's such concern about the mortgages to begin with is the jobs, right? The jobs market is kind of cooling off. It's not doing as good. If you looked at the stock market and you had a chance to talk to everyone in the U.S. one-on-one, it would take you a long time, over 300 and some odd million people. You would be crazy to think the market should be trading here, right? Because look, it's not easy out there. It's not easy out there at all, and we acknowledge that. But it's it's kind of nuts. Here we are. It's 2026. All right. So the trading plan for today, triangle trading floor. Inflation's cool right now. But unemployment has been rising. So wouldn't we lean more towards a rate cut? Yeah, exactly. Triangle trading floor. That's kind of where the market expectations are pushing the market higher. The reaction to a bad jobs report is a bullish market. And, you know, that's really been the case since Fed started meddling in with the stock market in 2009, which I traded through. And it was obscene to think the Fed would throw that much money at the market, and they did, and arguably they saved the bottom from falling out in 2009. All right, But it was even more obscene to think that they would still be in the market in 2026 and have their hand in it so deeply. Like, remember, pre-2009, the Fed was important, but not traders weren't like hinging on to betting odds for the Fed watch futures, watching every single tick. Nobody really cared like that because it was more of another economic report. That was what the Fed was. Yes, they controlled interest rates, but it was important, but it wasn't the market heartbeat, the pulse of the market. In 2026, arguably the Fed is the pulse of the market, and traders and portfolio managers and the whole financial industry is so focused on these changes. We're following who's appointed, who isn't appointed, are they a dove? We're looking at their criminal histories in the past and behaviors to try to forecast what's going to happen. We're that obsessed with the Fed. And yes, you're 100% right. Triangle trading floor, inflation's cooling, which their mandate would be supportive of not cutting rates if it's cooling. But the jobs report is so terrible that they have the reasons to actually cut rates further. And they're going to in 2026, just not in January. Yeah, right. I saw somewhere Triangle, this is an interesting discussion, and we're going to do a trading plan and be done with the update. But I love you guys, and I like engaging with you. I saw a statistic that if the Federal Reserve wasn't involved in the stock market, we would be trading 1,500 points lower. Now, keep in mind, look, it's a cool number to throw around. 1,500 lower means it's 7,000. Was that 5,500? Yes, right now. First of all, there's a lot of things there that, are assumptions that have been made to get to that number. But nonetheless, number one, where would the market have gone in 2009 with the Fed? I think that action was important, but I think they overstayed their welcome. And if you look at it, I don't think that was the plan. I think that was the result. I think they got stuck in that position and got stuck to helping somebody. And look, let's put this into context. If our friend had a problem in 2009 and asked us for some money, and we gave our friend some money in 2009, all right, and he continued to ask until 2026 for more and more and more and more money, you would start to think, hey, that's my friend's fault. Right? It's not his circumstances. It's just the way he does business. Maybe I should help my friend. That's what's happening with the Fed. They didn't mean to be here for this long. They just can't exit. I remember when they started tightening quantitative easing and running off balance sheet assets, that was immediately the market top. You guys remember that? It's a couple of years ago. Powell started tapering off the assets, letting them fall off the book, which means they're not buying mortgage bonds and securities to support the market. And S&P 500 threw a hissy fit immediately. And we always knew we were going to get back to quantitative easing. And we always know we're going to be in quantitative easing for the rest of our life probably. And where could we look to for more information on when this has happened already? Japan. Look no further than Japan. Japan's interest rates have been so low and they've been involved in the market. Japan is buying ETFs of their own stocks. Japan is in the market actively buying securities in the secondary market, the stock market. All right, that's crazy. Could that be the future for the US? Because the thing is, once you start giving your friend in need in 2009, $10,000, and then you're saying, all right, bro, I'm going to break you off $1,000 a month to kind of help you with your lifestyle. That $1,000 a month, he's not thankful for anymore. It would hurt him more if you took it away. He's become reliant on it. All right. Anyways, did I digress? I think so. I agree. Due to other regulatory reasons, hedge funds will be unloading their gold bonds worth $7 to $8 billion. So market will dump. I heard it somewhere. Lieutenant Cryptus, that's interesting. I would love to know what the regulatory reasons are for sure, because more so than offloading gold bonds, there might be other opportunities well in the market. I'll take a look into this, and if there's a story there, I'll bring it to you tomorrow. You can only do dumb stuff so long, right? It's like, bro, there's only so long I can keep helping you before you hurt yourself. And I'm helping you. I'm enabling you to hurt yourself as your friend. And that's what the Fed is doing for the market. Great discussion. Let's do the trading plan today. Yesterday's flip zone is going to be used as support today. The thing about a flip zone is if you find a good one and price is near it, you don't have to explore for a new one every single day. Sometimes you could lean on the prior day's flip zone. This is what I'm going to do today. We spent so much time below it, so much shorting into that level, and we couldn't break it. we finally have and we're above it. And so for today's session, I'm going to do the exact opposite of yesterday. Yesterday worked so well, but I'm going to be long above the flip zone. I'm going to start with a bullish bias because I like what's happened overnight. I liked, hopefully the pre-NFP report. The NFP report isn't the large majority of the bullish bias because I don't like to be bullish because of a news report. But sadly, here we are. We're above the 64. I like it for the long trade. And anything below 62, I'm going to flip bias to the short side. But we're going to use yesterday's flip zone where it was resistance, now as a support. And we expect this rally to get tested. I think early morning, we open the market up. This rally gets tested. It's already getting tested right now. I think we start to see some selling. And on the order flow, if the selling is structural and not overbearing, if it's not imbalances and hitting really hard and starting to look like a bearish development, we're going to use that sell off as an opportunity to get into the first trade. So we're going to be looking to buy weakness today as long as that weakness is not overwhelming the buyers. If the weakness overwhelms the buyers, you could be bullish, and that's your first sign right there. You're like, look, I'm on the wrong side. I'll bias flip and get bearish. But before I bias flip, I'm not doing it willy-nilly. I only bias flip one day or one time a day. If I start out long and the thing flips to the short, I'm not going to flip back to the long and then back to the short. That's how you put your in a meat grinder. No point of doing that. It hurts. So I'm going to be bullish. I'm going to be convinced to be bearish. And if I get convinced to be bearish, I'll flip to the downside. And that convincing factor is how we trade coming up into our flip zone of 62 to 67. All right. That's the plan, Stan. That's the update. Pencho with my brother. You are most welcome. I appreciate you. And thanks for the info. I've learned so much from you guys, and it's definitely changed my trading. Cheers. Hey, that's honestly triangle trading. That's love, my brother. Thank you. And I'm really happy to hear that. It's probably the biggest joy you could upload to my heart virtually is to say something like that. And man, honestly, good for you. It's what we do this for. This is the reason TRADEPRO Academy exists. We've been around for a long time, since 2012, and the goal, you could ask our team internally, the goal is always, how are our members doing? That's our biggest metric that we use to evaluate ourselves. So I love you guys. Thank you so much. I'm grateful for each and every one of you coming out here. I know the biggest and most important thing is how you invest your time and money, but time most importantly, because time makes more money, and more money makes time too, I guess. And I know you're here on your own time investment, and I appreciate you, and I love you, and we're going to do more of this. Have yourself a great rest of the day. I'm going to head on over to Trading Room. You can check us out at TradeProAcademy.com. We got some great stuff coming your way. There's a new order flow course that I'll be teaching personally, and a new order flow trading room that I'll be running personally. I've taken a bit of a break from the business, but as you guys can now know, I'm back fully, and I'm ready to lock in with you guys. Have a great day. Thank you for the discussion. Thank you for the comments, the two-way dialogue. I love it. I thrive on it. You have a great day. Like, subscribe, share this video, blah, blah, all that good stuff. Take care, guys. Have a good day. I'll see you on Monday, and a great weekend to you and yours. Goodbye.